Hi everyone, welcome to another Weekly Forex Forecast for the week ending October 9th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the New Zealand dollar versus the US dollar, as well as gold or XAUUSD. And we're going to wrap things up with VeChain versus Bitcoin, that's VETBTC. We continue to see markets consolidate overall, but I do think we're going to get some pullbacks that could offer buying opportunities over the coming weeks. I also think that VETBTC could be on the verge of breaking higher. So we'll get to all that and more in today's video. So let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up we have the EURUSD, and this one's pretty simple in that we have this short-term rally that's occurred recently, and now we have this pullback. So we had a lot of consolidation up here. We then had the breakdown a couple weeks ago. Now since that time, the pair did test 116.15, which I've marked as minor support right now, but I do think buyers have more work to do, as in they have to close the pair back above that 118 area. So you can see how we have this trend line, this short-term trend line from some of these recent lows. So in my opinion, in order for the EURUSD to get bullish again in the short term, we do need to see a move higher into 118 followed by a close above that. That would re-expose that 119.60 to 70 area. However, I do think that we have at least one more pullback into 116.15 and perhaps even lower, perhaps down toward the 115 area. Now, if we look at the monthly and weekly timeframes, the monthly time frame, the pair is still holding above that long-term trend line. So one reason I think that we could see a pullback into the 114.50 to 115 region is, if you'll notice, last month carved a bearish engulfing month. So we have this bearish engulfing month in September, and then you can see where the 114.50 to 115 area has served as a key level for several years. Notice it was resistance back here. It then served as support through this area, resistance again, and even resistance here recently. So this region between 114.50 and 115 is going to be one to keep an eye on over the coming weeks. I think that any rotation into this area could produce a buying opportunity, and even though we could see some weakness here from the EURUSD, I have to stay constructive as long as the pair is staying above that 114.50 area on a monthly closing basis. So looking back at the daily time frame, that means that 118 is resistance, 116.15 is minor support. However, if we get through that, again, keep an eye on that area between 114.50 and 115, as that could become critical support over the coming days and weeks. The pound is a little more difficult to figure out than the euro. However, this 129.80 area is the one I mentioned a few weeks ago. This is the area that I said buyers have to break in order for the pair to turn bullish again. Notice it served as resistance back here. It was even support on this candle. So 129.80 remains resistance, and support comes in around 126.70. So right now it's just a matter of whether or not the pound can get back above 129.80 or if it breaks down below 126.70. If it does get back above 129.80, we could see another run at 132.60, followed by that 134.80 area. Alternatively, if the pair gets below 126.70, we could see the pair sell off down here toward some of these recent lows around 125.20, or if we see an extended move lower toward this swing low back here right around 122.50/60. But if we look at the weekly time frame, this one is in more of a range. So we have this long-term range here that has been in play. So until we really break out of this range, with the top end being up around that 134.80 area, this is really just a sideways market. So even though you could trade it, I would be careful trying to hold for too long just because we don't have a ton of momentum here. That said, this short-term uptrend is still intact. So the idea of trying to sell the pound, in my opinion, is still a bit risky. I would rather look for buying opportunities on pullbacks, or again, if we get back above 129.80 and that area starts to serve as support and we were to get a bullish pin bar, that could provide a buying opportunity for a move up toward 132.60. But just keep in mind that the pound is directionless looking at the weekly time frame, as we're still caught in that range between 134.80 and perhaps the 120 area. The New Zealand dollar recently broke down from an upward sloping flag that I mentioned a couple weeks ago. So we have this upward sloping flag, which tends to act as a rising wedge within an uptrend. So we have this uptrend, we have this upward sloping flag, the pair broke down, which typically signals weakness. However, one thing I wrote about a couple days ago is if we did see buyers close back above that 66 area, that could signal strength. And if you'll notice, where Friday caught a bid, it was right at 166 or just above it. So it was right at that trend line that makes up the bottom of that channel. Furthermore, if we look at the monthly time frame, you can see where we're still holding above that multi-year trend line. So we had this false break back here in March, which a false break like this tends to trigger a move in the opposite direction. So we had the false break, which this month closed back inside this wedge pattern. That confirmed that this was a false break. We then got a close above wedge resistance, and the New Zealand dollar is still holding above that area today. So just like the euro, as long as we hold above this multi-year trend line, I have to stay relatively bullish in the long term. I'm also still keeping an eye on the possibility of an inverse head and shoulders here. So if we do get another pullback from the New Zealand dollar, perhaps down here toward the 64 area, that could complete an inverse head and shoulders for a move higher. So as of right now, we don't have that, but I do think there's still time for the New Zealand dollar to pull back, even though we did get this close back inside of this channel last week. Another thing to keep an eye on here is whether or not this turns into a short-term head and shoulders. So notice how we have this high back here. We then have what could be a double top up here. And if we come up here and then fail, that could be the beginning of a short-term head and shoulders that could take the pair down here toward 63.80, perhaps even just a bit lower. And that would also satisfy the pullback that I just mentioned toward that long-term trend line. So like a lot of these markets right now, I'm relatively neutral here in the short term, but long term, I'm bullish the New Zealand dollar. However, I do think we could see another pullback over the short term, especially if we see the pair close back below that 66 area. So I just wrote about gold, or XAUUSD, on Friday, where I mentioned how this 1910 to 1920 area is resistance. So you can see where 1910 served as support here recently, which means that this region is going to be resistance. Furthermore, we have this trend line from the 2075 high that could come into play perhaps around 1920. So that 1920 area is the one that buyers have to break in order to send gold higher, perhaps up toward the 1970 region. However, like a lot of other markets out there, we could see another rotation lower into the 1850 region. If sellers do break that, keep a close eye on 1790. If we look at the monthly time frame, you can see how several years ago that 1790 area was resistance over the course of nearly a year. That means that if we do see a break below 1850, 1790 could become critical support. Now, at the same time, if I look at the daily time frame, you can see where we could have the beginning of this falling wedge here within an uptrend. So if I connect these two lows down here and we use that same upper trend line from the 2075 top, this could just become a wedge pattern or triangle within this broader uptrend that began in 2016. So this is something to keep an eye on too, because if we see a rotation lower back toward 1850 and then a pop higher back toward the 1910 area with a daily close above that, that could confirm a break from this wedge pattern and could send gold higher back toward 1970 and perhaps even retesting 2075. So this is all stuff to keep an eye on, but in my opinion, given the uptrend here since 2016 and also the multi-decade uptrend, I like the idea of looking for buying opportunities on gold or a break above the 1920 area for a continuation of this uptrend. Last up, we have VET versus BTC, that's VeChain versus Bitcoin. And the reason I'm pointing this out today is because we have this really interesting wedge pattern developing after retesting this critical support at 100 sats. So notice how we have these two highs back here, and we also now have several lows right around 100 sats. Now think of a sat like a pip in Forex. It's the smallest measurement of Bitcoin. So right now, this area needs to hold as support And furthermore, we need to see buyers close the pair above this trend line from this recent high. And right now it's unclear whether we'll get that, whether we'll see a break higher or perhaps a breakdown below 100 sats. But even if we do, looking at the weekly time frame, I do like the idea of an eventual move higher, simply because we had this series of lower highs and lower lows back here. All right, so we had this high, we had a lower high, another lower high, and then we had this low back here, we had a lower low, and then back here we had a higher high. Now, this high up here represented the first higher high within this series. So we've had this nice rounded price action, and this is why I like the idea of eventually looking for a buying opportunity for that next push higher. So essentially I'm looking for a higher low after this one back here. So we've had a higher high, now I'm looking for a higher low. Whether that occurs at 100 sats or maybe we get a false break below that area before we move back above 100 sats, in my opinion, this pattern here on the daily time frame is really the one to keep an eye on. So again, we need to close above this trend line in order for the pair to push higher. And lastly, I do want to point out that if we do get a break higher, it's nearly 90% back toward that recent high. So this is one to keep an eye on, because a break higher and retest of that recent high around 240 sats would be a gain of 90% without leverage. So this is one to keep an eye on, in my opinion. It doesn't mean that 100 sats is absolutely going to hold. Again, we could see a close below this area followed by a move back above it, with this becoming a false break. So that's something to keep an eye on too. We could see a move below 100 sats, because I guarantee you there's a lot of people buying through here, which means that there's also a ton of stops just below 100 sats. So we could see the market move lower, take out those stops, and then move higher. So be careful if you're trying to buy this now, because we could get another dip before we take out that trend line and then move back towards some of these recent highs. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.